Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It is August 21st. This will be our chart lesson for today. Let me make this a little smaller so you can see the entire day. Um, Early on, I wasn't sure. I saw a steeper two-tiered channel, but we had a break, a new high, and then a little correction. But as the day went on, you could also see this possible channel sitting up, but we didn't really have when I posted the midday chart, we really didn't have enough evidence yet. But as the day went on, I believe this to be it. Earlier, I had it a little bit steeper than it is now, and as we got more price action, I flattened it out some. But you could get even this two-tiered channel for the most part early on today, and it turned out really well. Um, and again, let me just show you this one in case you saw it, just in case people ask. There was one that I had drawn right up through here like so, and prices fit it fairly decently. So, and it has a midline, and you can see that there. So I was a little torn of which way to go with, but notice we had the break of this one, a new high, and then the rule says we'll get a correction that lasts a little more than an hour. So if that correction would have started there about 10:15, and it really started going higher about an hour later. You can see that. You really could call this the high, I do believe. And we actually made the high on this bar. So 9:38, and the correction really picked back up about 12. So it was a little more than an hour, in my opinion, there. But even if you started it here, 10:15, and started back around I'd say it started back on this bar, so that's still almost 2 hours either way you look at it. So, we met the rules to continue forward and go higher, and so that led me to believe that this probably was a shorter term channel. It was a little too steep, and so prices settled down and got into this more of a 45-degree angle. So I hope that makes sense to you. But once I realized the bigger one, once we had enough price action to confirm this one, and what really confirmed it was when we turned down off of it, and right here we tested that same line twice. And again, I originally had it a little bit steeper than this, but when we didn't make these highs up here, I adjusted it down and used the closes in the bottom of this one, and it fits real nicely. So you can see that there's no doubt that's the channel. It's two-tiered. The midline, we've tested it multiple times from both sides, and it's holding prices nicely. So this is what I was trading with after about 9:30 or so, right after the midday chart. Again, when we got that bounce right there, that's when I really liked. That's when I really liked this one. Of course, I adjusted it just a hair from the original one this morning, but the one this morning was close enough to still come to the same conclusion. So, but let's talk about the trades. Actually, before we talk about the trades, I want to say this. If the weather is pretty next week, I'm probably going to take the week off, so there may not be any chart lessons. I'm not going out of town. I'm not leaving or going anywhere. So if I get bored and there's nothing going on, or if it rains in the afternoon or something of that nature, I may come in and do a chart lesson, just see what the market's doing. But most likely there will not be a chart lesson if I take off. It's the last week before school starts, so I'm going to take it off, spend some time with my kids. We've got a football game that weekend in Atlanta that I'd like to go see. It's actually on Thursday night, so I'm probably going to take off, enjoy my time with my kids, and do that kind of thing. So if no chart lesson next week, you know why. Okay, I had a slight interruption. So just to clarify that, I'm probably going to take off next week. I'm not really going anywhere. I may go somewhere Thursday and Friday, but otherwise I'll be around most of the week. And so if it's raining or the weather's not good or I get bored and my kids are doing something else, I may come in and just look. And if I get, me, when I can't stay away from the market when I got nothing else going on, I might come in and do a chart lesson. But if there are no chart lessons, you know why I'm taking the week off. I will put a vacation reply on my email, so you'll see that. If you would, just hold any emails for next week for any questions until I get back, if you don't mind, just so I don't get too far behind. And if there's any emergencies or anything like that, obviously I'll try to answer them. But I'll be checking my email, only a day, once a day or something, probably late in the evening. So, uh, but if I'm not here, I hope you have a good week next week. Um, this thing has been so slow this week, so next week will probably be fireworks since I'm going to take off. Happened last time I took off and went to Brazil. We had fireworks that week, and I missed out on it. But either way, you need a break from trading, and this will be my last chance to get any time with my kids before school starts back. So I'm gonna take the time and enjoy it with them. So, but let's talk about the trades now. Early on, this looked a lot like a range early on. You can see the lows across here, and let me point this out before I forget. Look at this, how this did. You kind of had you had a run up and a little double bottom, and then a little double test where each one pushed lower. Now look over here. Look at that little double bottom. You could even show it right there, and then look at that little double push down, and it went higher. This is a repeat pattern. It's exactly the same thing, and that's why I liked going long here. Plus, we're above the midline, and it was bouncing off that midline, so that's going to keep you out of any shorts. I just don't think you want, by this time, it's obvious that everything's uphill. Notice I didn't mark any shorts past this point. It was real tempting to take one here, but notice I didn't mark it because we're making higher highs and higher lows. Even though we've had a little short-term trend down there, the overall market is making higher highs and higher lows. Plus, there's the fact that there's this possible trend line coming up right here. And you're real close to that right here. So the last thing you want, and you look how it skipped over that. Notice how there's that gap right there. I can draw these trend lines, and you'll see that happen a lot. And when you see it gap over a line, there's a good opportunity. That's a valid line. And don't ask me why it does that. I guess because the people are trying to buy right below it and the people are trying to sell. I don't know why it does it, but I see that enough to know that when you notice a jump over a line, you'll see it over the midline sometimes, like that, and but don't ask me why. I can't explain why it happens. I'm sure there's a reason, and if you sat down and really studied it closely, you probably could figure out, but there's nothing there that, makes you want to trade that, so it's not worth spending the time to figure it out, in my opinion. That's the reason I haven't. If there's something worth spending the time to study and figure out, I'm going to spend the time to do it, because that's the key to this thing. If you really understand what prices are doing, you don't get fooled nearly as often. And notice how I'm always telling you what prices do. They go from one side of the channel to the other. Here they were coming off the midline. They got below it, but then they went to the upper side. And generally when you come off the upper side, you'll go all the way to the lower side. And then you came off the upper side here, and so you were headed back to the lower side, but look what happened. You got a low, first entry short, pull back second entry short. So even if you didn't notice the repeat, there's a failed second entry short. You know that you had this low off the midline. It tested it 2 more times, and it trapped everybody, and look, boom, that was a nice trade. And this was the real trade of the day right here, but this was another nice trade right here. I actually liked entering here, and I'll explain that when we get there. But anyway, starting off, it looked like a trading range. And we had the double top on a little failed break, and we tried to go higher again, so you had a failed second entry short. I would recommend using a limit order here. You could have gotten filled on a limit order, and it runs down, and it gets just enough. I think even if you use a stop, there was enough to get out there. Let me just verify that. On a bar like that, that's not a perfect setup. A lot of times I'm going to use that limit order. 85, 75. No, that worked. Even if you use a stop, you got out of that trade before it bounced. But here's another thing that I don't always talk about a lot, but a double top can swing as a new high or a first entry. So in other words, there's your first entry long, pull back, second entry long, so it's a failed second entry long, but because it's a double top, I could count this as the new high. Pull back first entry long, pull back second entry long, it failed, and at the time, it's like a breakout pullback short as well. So I like that one to the downside if you used a limit order. Even if you used a stop, it still worked. But that, again, it's not a perfect bar. But it's somewhat of a trap, and it's a breakout pullback short. So I liked it, and I know the limit order would have gotten filled as much as a tick back into that bar. So easy to get in. Even if you use a stop, it still worked. But I think you got to use a limit order because it's so close to those two lows right there. And you want to try to be out before you get there, or at least one tick past it. But really, you're better off to try to be out before you reach that because, look, it looked like it was going to bounce there for a minute, but then it broke on lower, and then it bounced. And so hopefully that makes sense. And now you've got your break of this trend line, a move to a new low, and then look at that little failed break lower. Again, I don't like entering on that bar. But notice how so waited on a break above this one, and when it pulled back, I like trying to get in with a limit order and then trying to get out before you got back here. But it wouldn't have mattered. It went all the way. Turned out to be a nice trade. And a real aggressive trader probably would go long right there. But you're better off to wait on this bar. But you don't want to go long above the top of that bar. That's too risky. So let it break higher, and if it goes without you by doing that, it just goes without you. And I try to explain that to people. When you can learn to be patient and it doesn't rattle you to miss a trade and watch it go without you, that's when you're going to be a better trader. Because what happens is people see these trades go without them, so the next time it bounces, they chase, or either that or they start chasing it way up here saying, I waited too late, I missed it, it's going to keep going, and they get in and it goes just a little higher and turns down, and then look what would happen if you got in way up here. Comes all the way back, runs everybody, stops on everybody that got long, and then goes right back to the same place and makes yet another new high. And the ES that's just its MO. That's how it works. It does that over and over and over. And so we've watched it enough to know the tendencies, and we know what it's going to do. We know once you find this channel, you know it's going from one line to the next in most cases. And if you wait for the right setup, you're going to get an opportunity to get long with it. So keep that in mind. But so I like this trade to the upside. At this point, I was looking at the shorter term channel coming up through here, the early one that I showed you a minute ago. So I wasn't crazy about going short here. If we'd have had made another move up and then went down, I would have said, hey, yeah, let's go short right here. And really all this really turns out to be is a trading range. And this is there's a failed break lower, a failed break higher, another failed break lower, and then it started trending higher again. So you could have looked at this maybe like a failed breakout, but I didn't like it, and I was too afraid it was going to make another run up and get at least a measured leg like this right here. Here's your first leg up. And so a good target's going to be that right there. And that's about where we've gotten to. Notice that. But now I would really probably be looking as these first two legs as one move. And so on a bigger picture, I might even be looking for that as my move. And they look like they're very close to the same place. So you see we're not far from that. But the reason we're not getting there is because you've got this trend line, trend channel line, and it's finding too much resistance off of it. Too many people recognize it and they're selling every time it gets up there. But we don't do that because look what happens if you went short right here. It's going against you now, and you wouldn't have gotten out unless you got in way up here with a limit order. It's just not worth counter trend trading, so don't do it. If you'd have counter trend traded here, you'd have got burned. This one probably would have worked, but it's just not worth it to risk it because you don't know if it's going to do this or if it's going to do what it's doing right now or what it did right here. Because generally once you get the reversal, a lot of times you'll get one more test of that high just to run the stops of the people that got short early, and then it goes where you think it's going to go. They love to do that, and I can show that to you over and over and over. So anyway, it comes down, you get the failed break lower. If you were looking at the first channel, it's the first break, but look at that reversal there. That's rejection. That's what rejection looks like. and you couldn't get in. You may not have got your stop in there in time, so you might have had to wait for it to go a little higher and then put your limit order, and it came right back, and it would have filled you at the same place the stop was. If you tried to sneak in a tick earlier, though, like right across those highs or even back into that bar, you wouldn't have got filled on that trade. And you can see that bar, though. That look, it opened here and traded way down here, and before it closed, it was all the way back up at those highs. I actually had a stop ready to go long, hoping it was going to break higher right there. Excuse me, my throat's bothering me a little bit there. I got a little bit of itch in the back of my throat. But it didn't break higher, but as soon as it closed, it jumped up there, so I got filled the same way either way. Uh, People ask me all the time, how do you enter on a stop on above a signal bar? You have to use a stop order. It's the only way to enter. You just right click and you choose a buy stop order and you put it in there. If the prices have already gone past, then you can't put it in there because you can't put a stop order below a buy stop order below current prices. You can only put a sell stop order below prices. So if it's already gone without you, the only way to enter at that same place is to put a limit order and hope it comes back, or either wait till it gets lower and then put your stop back up there again. So I hope that's clear. If you don't understand how orders work, you need to go study up on that, because there are some specific rules to them, and that's, I don't want to, I don't teach at that level. That's just basic stuff that you need to already know and understand before you ever start trading. So if you don't quite understand how orders work, definitely don't be trading live, and go read up on how orders work and make sure you understand it, because it can be tricky. And, early on, I haven't done it in a long time. I probably need to knock on wood for saying that. But every now and then, if you're not paying attention, you'll try to go long here and you'll end up with a short order. And, early on, I made that mistake a lot. It's amazing how often I made that mistake, but I was thinking too much. I had too many thoughts running in my mind. Now it's just automatic, and I don't think so much. I just go with the flow, and I know how to drop my order in there, and it's just a matter of a couple of clicks, and it's there. So just as an example, if I wanted to go long right there, I just put my little arrow right there, right click, and look. Buy 10, sell 10. I actually want to buy, but see, the prices are above the market, so I can't there's no option for a buy stop there. Let's say I wanted to go long. If prices break above here, I would click right here, and look, there's my buy stop of 10 orders, just right there. I want to cancel this because I don't want to buy right there yet, but you see that, how easy that was. That's all it takes. And if I wanted to go short on a break below that bar, which you wouldn't, that's not a trade setup, but sell stop 10 right there. And it's that quick. That's all it takes to put an order in. Now, if prices are already up here and let's say I wanted to get long right above this bar, and I didn't, it went without me, so I can click here and put a buy limit. And so if prices come back and tick through that, then I'll get filled. Now, of course, you probably wouldn't want to enter a buy limit for this setup after we've already been to the high and started working down. But that's just to show you, if prices were right here and they went one more bar without me, I could still put my buy limit order right there. And you can see it one tick above, and we'll see if it'd come back and fill it. And so notice it didn't, though. So it's real simple to enter those orders, and you need to understand how they work, though. You need to understand the rules that the CME uses for its order placement. So anyway, nice long right here. This was the trade of the day, and you could ride this all the way to this high right here. And it could have gone higher, but normally what I'll do is I'll exit wherever my upper line is, a tick or so in front of that. And so you get out within 2 ticks of the high right there. Sure, it pulled back and it went another tick high, but even then you still got out within 3 ticks of the overall high at that point. And so that's the way I like to do it. Every now and then I'll kick myself because it'll run and keep going and make another leg almost twice as big as that one. But most of the time, and that's what you got to remember, what happens most of the time you'll see, like, this is not a great setup, but look how it was an easy trade. It wasn't a great setup, so you might have watched that go without you. But what you can't do is get upset at yourself because it went without you. Because many times you'll see it work this time, and the next 9 times you try to take that trade, it might fail. And just like right there, look what happened. It went up and it failed. So, and it could have been like right here. It could have went higher and failed, and it runs all the way down. No way you can ride that out. You might ride this little bit out if you used a 2 point stop or whatever, or even this one. If you even if it would have turned down here, it ended up going higher. So you could have, if you kept your 2 point, but I don't recommend that, and I'll talk about that here. If I enter here one tick, my stop is going right below that bar, a tick or two, so that I don't want to risk 2 points on a aggressive trade because I might be wrong. It's amazing how many times you'll be right if you're really in sync with the price action and reading it properly, but just in case, you don't want to give 2 points back on that trade. And this one especially, this was a really good trade right here in which you had, look at, it's only a 2 tick bar. So if you go 1 tick below it, the most you're going to risk is 3 ticks. And if you go 2, you're only going to risk 4. So that is a low risk entry. It's a second entry. I'll explain that. We haven't got there yet. Let me talk about this trade. We're working up, and look at that channel. It's clear that I have that channel drawn right. It's holding prices. And what happens a lot of times on these real tight, people always ask me, when is it okay to take a first entry versus a second entry? We almost always want a second entry. But guess what? When you get a real tight, strong trend like these working down, you don't get second entries. Why? Because there's not room to back up enough to get a second entry. So the only way to enter is to be able to read the chart at a different level and know that there's some moves in here, and it moved up here and then turned back down. And if you went to a smaller chart, you would see a little failed second entry long there. So you might think about going short there. I don't like to do that because it gets a little more complicated and it really confuses people. So I don't talk much about that. But as you get good at this and as you begin to understand price action and then you can see what's going on at every single level on a single chart, then you might want to start doing stuff like that. But don't try to do it until you're good enough to do it, and that's way advanced. And so, don't send me a bunch of emails on that because it's too complicated to describe it. There are some videos on the website, some free ones, in fact, so you can go watch them. But understand that that's very advanced. But once you understand that price action works the very same on every level, no matter whether you're on a 10 tick chart or a 2,000 tick chart or a 1 minute chart or a 30-minute chart. If you took the labels off, you probably couldn't tell one chart from the next. And price action works the exact same way on every one of them. So the only reason we like to stick to the size we stick to is because it doesn't move too fast that we can't easily read the price action, and it doesn't move so slow that you don't get enough entries. That's how we came to be with a 2,000 tick. If you're good enough, get on a 1 minute tick and trade the heck out of it. But I can tell you now, based on my experience, you're probably going to lose more because there's more failures at that level too. So you probably could get on a 3 minute, but a 3 minute moves too fast for me. So, because it'd be much more like trying to trade a 1,000 tick chart. It just moves too fast. You don't have as much time to think. You can't be comfortable, and you'll make more mistakes. And if you're not comfortable and you're making mistakes, you're not going to succeed at this. You need to be very relaxed, very in the flow, and you need to have time to think about it. You need to have time to put your orders in. That's another thing about a really fast chart is you don't have to. On this 2,000 tick, most of the time when that bar closes, you got time to put your order in before it breaks higher. On a smaller chart, many times you don't have time to put your order in. It moves too quickly. So there's reasons why we do what we do. And I've probably had, over the years, I've probably had at least 1,000 people contact me and tell me how much better they like a smaller chart and how well they're doing. And inevitably, every one of them writes back to me later and says, you know what, you were right. I had a little bit of success on that chart, and now every trade I take fails. And I went back to the 2,000 tick chart, and everything is working smoothly again. So, you can't reinvent the wheel. That's all I'm going to say about that. So, anyway, you got this chart moving up. It pulls back. There's a first entry there. It's not a great signal bar, uh, but that could have easily ticked up as it closed as it could down. So, most everything's at the high side. So when this broke higher, the way to trade that is to maybe put a limit order, a tick in, maybe even try 2 ticks and see if it'll pull back and fill you, and then go higher. But it's a first entry. But prices are probably going to try to make a new high, and they're probably going to try to test these highs right here. So, and it probably trapped some people that thought this was a range day and thought, hey, we're coming off the range again, so you go short here. And so it probably trapped some people. But when it broke higher, it hit those stops of everybody that had gotten short here and was trying to get short here and maybe even here. And it surges up real quick. So, and notice how that high comes into play right here as well. That's why it always pays off to keep drawing these lines across, because that's a double test of what was acting resistance, and now it held as support, and then you get one more little trap, and boom, off it goes. And we're still trying to go higher over here. So anyway, a little bit more risky, a little bit more advanced, but there's a setup right there, and that's when you'd want to take a first entry or risk a first entry. There's enough room to get out. There's not really enough room to get out here no matter how you enter it, but there's enough room. This is the one that you're worried about, this one, but not nearly as much as here, because you're probably going to try to test this high again, especially if you see the channel. We might even make another new high, but this is the one you got to get through, that you're worried about getting through the most. And see, you notice it kind of hesitated right here a little bit, and then before it went higher. So that's and there's another first entry here, but now you've got your break and a new high, and you're coming off the top. I just don't think you can risk that one. If you did, nice trade again. You probably want to let it tick higher and get in with a limit order, enough room to get out before here. And it would have worked even with a stop, I believe. 1, 2, 3. No, it would have been a 4-tick failure if you entered above the signal bar, which is this one here. But then you start working down. You get a little closeout and a new low. That's a second entry long. But what I liked about it was this repeat pattern. And again, it's a little bitty bar, so you can get in with low risk. But even then, I wanted to get out before we got up here. So I used a limit. I waited on it to break higher, and I dropped a limit order 1 tick back, and it did get filled, and then it went higher. And so I was out a tick or so before we ever got to the high there, and then it pulled back. And now it gives you the second entry long. This is not a great signal bar either. So, but I like the fact that this held twice above on this. Plus, it looks like a repeat pattern over here. So there's a good chance we're going higher. You might use a limit order here because it's not a very pretty signal bar. So that might keep you out of it. But just try the limit order. And then when it went lower one more time and turned up and closed on us very high, there's no doubt now. Just drop your order there. If it went too early, put your limit order in there and see if it'll come back. And that was a quick, easy move. This was the trade of the day. This was not a bad trade. This was the trade of the day. And if you got in down here, these were some pretty good trades too. So you had a hard time getting your runner off this one, but you would have had a runner here, and you could have added on here or just finally entered right here, and you wouldn't have mattered about a runner. Would have kept going there too as well. So, and you could still be long. I probably would have exited right up here, but you could still be going strong on a long right there. And that's what I saw today. So good lesson today. There was some interesting things that we could show you here and talk about. I did want to share one other thing with you. I've shared a couple of his emails here lately. I'm not going to call his name. English is not his first language, so that would give you a hint, because I've told you he's sent me some stuff before, and he sent me, hey Mac, here's my chart for today. I was working and done. Oh, I did it on Ninja in Sim without looking at your chart. I added one simple line. I added one thing: simple lines that go up and down with price. It's been crazy. It keeps me on the right side of the market. I can spot traps and second entries much better now. I took 8 trades, all winners. I've been talking to some of your students who I met on Big Mike. I can seem to explain. Oh, I've tried to explain to them that you need to learn to spot here, and this is key because I just talked about this. You need to learn to spot everything on one chart. A doji on a 2,000 tick chart could be a pullback on a 1,000 tick chart, or a consolidation on a 2,000 tick chart could be a two-legged move on a 1,000 tick chart. It's funny, but I can see it all on one chart now. And that's what I try to preach, is that you don't need multiple charts. All they'll do is confuse you. If you force yourself to look at one chart, you will eventually get good enough to see everything on that one chart. And I'm a strong believer in that. You don't need multiple screens. You don't need multiple markets. You don't need multiple time levels. You need one chart, one market, and become an expert at that chart and that market. And that's as good as it gets. And, there's plenty of trade. Even on these have been, I mean, this last week has been what I call slow, methodical, not much volatility, but everything keeps going up. I mean, we've been going up every day, and all you got to do is find that trend and get on with it and buy when it pulls back to the buy spots or the setups, and you'll make money. And you don't need all those charts. You don't need all those markets, because if you're watching multiple markets, you can't concentrate. You cannot read the price action and concentrate on it when you're trying to read multiple markets. There's probably some people that could learn to do it, but why? Why not just be an expert in one market and know that market better than 95% of everybody else? That's been my goal, and that's what I try to do in the ES. And I think that's the way to go. But anyway, I'll continue on here. This is the interesting part. The scary thing is I'm fighting with myself now. I'm telling myself, this can't be true. How can I have all these winners? It's a mental game, and I'm going to stick through it. Okay, sorry, I had a little interruption there, but that's the mental part coming in, and that's the same. I can remember being there. I'd have all these winners in a row, and every new winner, my mind would play tricks on me, and it would say, you can't keep winning like this. You know this isn't possible. You're going to have a loser. And as soon as I'd think that, I'd have a loser. So I know where he's coming from. I know I've been there. I know that feeling. I can read his excitement in the email. And I'm glad he's having success. He hadn't been at it very long at all, to be honest with you. He's been trading for a long time, I believe, if I remember right. But I don't think he's been doing the price action very long. But for whatever reason, it's clicked with it. It's resonated with him, and he gets it. He caught on to the second entries real quick. And I think that's mostly what he's doing, is looking for second entries during pullbacks to the EMA and the trend line. And he's knocking the ball out of the park doing that. So for those of you that still can't seem to get it or still struggling, here's somebody that's able to do it. So have faith. Just keep working on it. It'll come to you. But you got to follow the rules. You got to get a hold of that mental piece of it that I talked about yesterday. It's that mental aspect of it. You got to believe you can do it, and you've got to be able to control your emotions. You can't, a winner shouldn't excite you, and a loser shouldn't get you down. They're just both part of the process of being a profitable trader. And so if you have a loser, you got to shake it off and move on, just like it never happened. And if you have a winner, you shake it off and move on, and you don't get excited. It's just like it never happened. It's just part of your job that you do every single day. So 34 minutes worth. We'll be back to do it again tomorrow. Just a reminder, though, there probably won't be any chart lessons next week. I'm probably going to take off and spend the week with my kids. So anyway, I'm going to wrap it up for today, and I'll see you tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.